Hello, everyone, and welcome into CrushTheStreet.com. I'm Kenneth Ameduri. I got another guest today on the line, and I really want to get into the discussion of money and the evolution of money. And we've talked about sound money here at Crush the Street since our inception. You know, obviously precious metals, and then we got into cryptocurrencies and just really trying to wrap our minds around where technology and economics really set in best. And I have on the line Thomas Coughlin. He's the CEO and the founder of Kinesis. And this is a new cryptocurrency, but it's backed by precious metals, which is very interesting. I know that's the criticism that Bitcoin and a lot of these other cryptocurrencies get, is that it's not backed by something, but this is kind of like maybe the best of both worlds. And I guess even if you don't like cryptocurrencies, if you like precious metals, this might be something to take a look at. So we're going to really explore this today. Thomas, thanks for coming on the line with me.
No, thank you very much. Thanks for having me on the show, Kenneth.
Well, you know, if you wouldn't mind, give us a little introduction, a background on yourself, and, you know, tell us about how your thoughts evolved with Bitcoin and, you know, precious metals, and then, you know, obviously how that led you to Kinesis here.
Yeah, certainly. Actually, my background comes out of the finance industry. I am actually a hedge fund manager, in fact, but this is sort of what led me on this journey. Back in the financial crisis times of 2008, 2009, I was looking for basically sound investment, a safe haven investment, which led me into the precious metals industry. And as I went into that industry, I identified so many inefficiencies within that space. And from there as well, I became a monetary student and delved deeper and deeper into, I guess, as you were saying, like the macroeconomic side and monetary history and everything like that as well. And it completely intrigued me. And I became ultimately a disciple of sound money, I have to say. In fact, I even ended up writing this big sort of thesis on it. And from there, I founded a company called Allocated Bullion Exchange, which is like an institutional exchange for spot physical precious metals. It's a global exchange. And now that was back in 2011. Now it's come a very long way. We've got partnerships with the likes of Deutsche Börse and other big exchanges, and even postal systems and governments all around the world as well. And it's come a long way, but from the very inception of that, we were looking at, you know what, like it would be really neat to be able to facilitate like peer-to-peer payments or transfer of value through that system. But ABX is a centralized system whereby it's like the central counterparty. It stands in the middle of every trade. And in addition to that, we saw one major problem, which was this principle called Gresham's Law, which is effectively bad money drives out good. And because of that principle, we saw that as being the main obstacle in actually a peer-to-peer transfer or payment system actually being successful. And we wanted to focus more so at ABX in on like our institutional efficiencies that we were bringing, and also just all the other benefits that we're bringing to market participants in the precious metals world. But now with the advent of like cryptocurrency, distributed ledger technology, blockchain technology, it's introduced this whole new ability to facilitate something else, which I'd like to explain to you. It's enabled the ability to actually defeat Gresham's Law. So yes, I mean, what we've done at Kinesis is we've actually developed an entirely new monetary system. This is a monetary system that's secure, efficient, and rewarding. And we've developed it for the benefit of all, both collectively and individually. And we focused in on what makes sound money, you know, in the case of gold and ultimately what effectively makes successful and sustainable money. It needs to be an efficient medium of exchange and effective store of value. Ultimately, they're the two major principles. And so we think that, with what we've done, we've chosen gold and silver as our primary currencies. Obviously, gold is the greatest store of value that the world's ever seen. And then with the advent of blockchain technology, we've put it on this highly efficient rail system, which is anonymous as well, so it protects people's liberties and identity, but also it's highly efficient. So it becomes a highly efficient medium of exchange as well. And then we've got some very unique partnerships which pipe into the incumbent legacy fiat system, as corrupt as it may be, but at this point in time, we still need that. But there's a third dimension that we've introduced, and this third dimension is our multi-level or multi-layered yield system, which is highly rewarding for both active and passive participation. And this really incentivizes for people to not only use gold as a savings account, or use it for savings or an investment, but actually use it as a payment currency as well. So not just a reserve currency, but a payment currency. And I can delve into that a little bit more if you like a little bit later. But that's sort of like the 40,000 foot overview, just from the top there, and what we're doing.
Okay, so I'm going to ask you a little more about the nuts and bolts here in a second, because I'm curious to see how that actually operates and how it works. But I'm interested in your perspective also on something like Bitcoin.
Sure.
Is it completely separate? Is it even in the same category, or is this completely different?
No. I mean, why was money created? Money was created to serve the commerce of the world. Firstly, I mean, how can Bitcoin and these cryptocurrencies possibly serve the commerce of the world when a business cannot even effectively use them as a currency? So for it to be a currency, it needs to be effective store of value, efficient medium of exchange. You need to be able to operate as a payment currency, but also a reserve currency. They need to be able to keep it on their balance sheet. And say, for example, I have like a low margin business. How am I possibly supposed to be able to use Bitcoin? I mean, my margins might be, 2% or 5%. And the volatility is out of this world. So firstly, the volatility. But why is it volatile? It's because no one really knows the value of these things. And what happens if the value is zero? Ultimately, they are valued according to the confidence that they actually have value. It's almost like fiat money, really. But there has to be confidence that they actually have value, and they have value to the extent of their technological, benefit that they provide. But the thing is, that technological benefit keeps on getting diluted with time as innovation and technology goes forward. And what are you left with if, your technology that you have, say, for example, Bitcoin technology, becomes obsolete or redundant? Then you have something that has no value. Whereas in the case of what we're doing, we've got something that's had value, for 5,000-6,000 years, and is the greatest store of value throughout history, ultimately. So that's my personal view.
Yeah, no, and I understand, and I appreciate your insight on that. And it really is the merger of the blockchain with gold and making gold more usable. So obviously you have experience with allocating gold, and so explain the dynamics of how much kinesis there is, how much gold there is backing it. I know there's a silver portion of this too.
Yeah.
Explain how that works. I think that'll help give people an understanding of why they should be able to trust it.
Certainly. Firstly, I actually don't like the word backing so much because, exchange traded funds are backed by precious metals, apparently. I mean, what our currency is and what it purely is a divisible unit of gold or a divisible unit of silver, but down to a unit size that it can be used as a currency. Ultimately, it's an allocated fraction, so allocated meaning title in your name, fraction of like a gold and silver bars, ultimately. So, I mean, one, say, Kinesis gold coin is 1 gram, and one Kinesis silver coin is 10 grams. That's the way it works, but then you go down into fractions of it, that are like cents, ultimately these days, and you can send and receive, send, spend, or sell these things. So that's really the way that it works. These are divisible units of allocated gold and silver, which you basically just use it as a currency. That's how it should be.
So if, let's say, is it start off with a certain amount of gold and a certain amount of Kinesis, and then if, let's say, somebody comes in and wants to buy $50,000 worth of gold Kinesis, do you add that supply to the marketplace?
No, it doesn't work that way. So there first needs to be gold in the system, and then once there's gold in the system, can this currency be created? So we've got a very unique, call it two-tier marketplace. At the very top is our primary market, and this utilizes technology that is like cutting edge, state of the art, produced by ABX, Allocated Bullion Exchange. And that's like our wholesale marketplace where people come in and they buy the Kinesis coins, or they can actually swap their metal in from the ABX system, and then they mint, they create, they become their own central bank effectively in creating currency. And as soon as they buy or mint these coins, then it's emitted into the blockchain, and they'll see it appear in their wallet in the blockchain. They're then free to send, spend, or sell it. Now, but the thing is when for a minter, we've got this minter's yield. We've got 4 different yields. It's as soon as they actually, so if I go in and I mint it, as soon as I actually sell it or spend it or send it, then I actually start to receive a yield from what I actually sent, spent, or sold. So this actually incentivizes with still at the same time keeping a sound money, sound stable money that can't be devalued effectively or prices inflated. That it incentivizes people to actually use it. So say for example I mint $100,000 worth of Kinesis gold coins. I then sell $100,000 of Kinesis gold coins. I have $100,000 out there working for me, in which I will receive a portion of the transaction fees on that $100,000 forever in perpetuity. So that's like a huge compelling proposition about what we do. We also have a passive yield as well, so a holder's yield. So this is also something really great, because if I just hold it in the system as well, I still receive a yield. It's not going to be as incentivizing as the minter's yield, because we want the money moving. This is actually where our name came from. Kinesis, in Greek, it means movement. And it's actually, in biological terms, it's undirectional movement from stimulus. So in the case of our current fractional banking system, it comes from the banks and goes back to the banks. It's very directional. In this case, it's the people who have the power, and they can create their own money. So in the case of the holders yield, which is passive, we actually then turn gold into a yield producing asset, which can compete with other passive investments like bank deposits, bonds, dividend producing stocks or rental property investments, etc., like that. So we actually start to target other capital investment and investment assets where capital is housed all around the world as well.
Okay, so that's interesting, very interesting, and it sounds like a very fascinating. I've heard the word crypto economics before, but and it's very powerful. So I'm curious though, where is the yield generated from? Not just how to do it, but where it's coming from, because the precious metals don't yield anymore. No. Where is the company making money or delivering value to gain a yield to give out on top of the currency?
So it comes from true economic activity, not debt, nothing like that. It just comes from a sharing of the transaction fees within the system. So, I mean, the way that we do this, and this is what technology has ultimately facilitated, and probably why no other economist in history has ever actually thought about this kind of system, is because we have created through the blockchain, which is still anonymous, but we can track every transaction. Therefore, when we charge, when a transaction happens, we charge a fee. We then say from that fee, It's shared amongst like 4 or 5 different parties, right? And one party is the minter who created the money in the first place. The next party is like a holder. The next party might be like a referrer, introducer, for example. So this is another yield. If you have friends or family, or you might even know a business, you might even have employees, you refer them into the system. You send money to them, or what they create a wallet, you actually get a share of their transaction fees forever as well. So it becomes this like self-fulfilling, all incentivizing ecosystem, monetary system, whereby everyone's rewarded within the system, whether it be for active participation in actually trying to grow the entire system or using the system, or actually just passively just holding it there as well. By holding it there, we have a yield which competes with other passive investments, as I was explaining. It's just a sharing of the transaction fees. It's very simple at the end of the day, but the technology allows us to be able to track and trace it all and then share it back.
So I guess in just the physical precious metals market, would it be the spread? Is it the buy and the sell spread? Is that essentially what you're capturing?
No.
No.
It's not like that, because if I was to give you a $20 bill, what's the spread? There is no spread. It's just I've given it to you.
So there's slippage then of the value of the gold if you're constantly chipping away at the transaction fees?
There's not slippage. We just the sender, not the buyer, not the receiver, but the sender is charged a fee, and that's 0.45%, 45 basis points. So that might be for a micro transaction of $1. It might be for a $1 billion transaction. One unique thing about our blockchain, we actually have developed our own bespoke blockchain off an existing system called Stellar, which is a highly efficient system. But the difference with our blockchain is we have percentage-based fees, so percentage-based of the value of the transaction. So we apply that 0.45% on every single transaction, but it's only charged to the seller. And we also are developing, and this is goes to what you're saying about the bid-ask spread. We also have almost completed our blockchain exchange as well, where there'll also be other cryptocurrencies as well as our own cryptocurrency. Well, if you call it that, it's really just a digital currency, which is like gold or silver, where you'll have like spread, but the spreads will be the tightest spreads in the world for like even in the wholesale markets for physical. I come from the wholesale. What we have already developed is a large wholesale physical exchange at ABX. We're bringing all this over, all this expertise and technology that we've already developed, all partnerships. We've brought it over to Kinesis. We've got like postal systems adopting it. We've got large organisations and big exchanges and things like that we're piping into. It's what we've developed is something very exciting. It's difficult to sleep at night. Let's put it that way.
Congratulations, Thomas, on that. That is really awesome. So I guess the next question is: does it need like a major network for it to work? Bitcoin is powerful because of the amount of miners there are and the network effect, the hashing power. And does the Kinesis need that for people to just want to own their gold with their Kinesis and the allocated gold that it represents?
Well, I don't know whether we need it, but we're going to have it anyway. Look, I'm a very sort of organic growth kind of person. I like to organically grow businesses instead of going for the big bang approach. There's certainly a critical mass that will reach whereby it will snowball by itself. I think we're approaching that now with regards to what the community, the thriving community that we've built out. We have a very a thriving community in like Telegram, for example, which is very large for people to go and talk about different projects in the cryptocurrency space. We've built out this massive ambassadors network of people who are so passionate about our project that just came from nowhere, I don't know where, that just grabbed hold of our project and are so passionate about it because they're such supporters and proponents of like sound money, and see the system as, you know, doing things like defeating Gresham's law, which has really held back gold, for example, as being considered like a currency. Ultimately, if I make the decision to exchange or swap my fiat currency for gold, then why would I use my gold as a payment currency when I value fiat currency less? I'm going to use my fiat currency to use it. So this is something that I think will always hold back gold from actually being treated as a payment currency unless you actually combat the problem. And the technology that we have now and what we've incorporated with Kinesis, it combats the problem because the incentive to actually use it as a payment currency is larger. So, I mean, even for example, if we do need a massive community, we've already got it. For example, we have a highly strategic deal with and this is more to say than I think any other cryptocurrency, than with a large mobile bank, which have 150 corporate clients and millions of users, and we have the exclusivity around their cryptocurrency wallet. So we already have this. The deals that we put together before even launching this business were already there because they were born out of an existing operation with an unblemished track record. This isn't something where we're sort of coming out with like a white paper and say, hey, everyone sort of buy into this. It's a really cool idea. No, this is coming from a team that's already successfully commercialized businesses, already has all these like business partnerships together and already just plugging everything in and ready to go. So that's like a very large differentiator between our organization and say other large, other cryptocurrency platforms out there.
Thomas, that's exciting. And I love that you guys are on to this developing, really. I mean, something that was historically a store of value, we have this new way to approach it. And, you know, it's not as much of a risk, in my opinion, because what you really have is gold and silver. It's just another way to transact with it, which again takes a lot of the speculation out of what we're doing. If you're already there where you're willing to buy gold and silver and you purchase gold and silver, this isn't that far of a reach for you to wrap your mind and to get into it. And I like that. So I guess with that, you know, tell us a little bit more about just kind of the roadmap and some closing thoughts here as we conclude this interview.
Yes, thanks a lot. So what we're doing at the moment is we're in the middle of what we call our Kinesis Velocity token offer. So we've got two offers. One's for our currency suite, like backed by gold and silver. But before that, we're offering the ability for people to basically invest in and share in, I guess, the rewards or the transaction fees of the entire monetary system. As you can imagine, like a monetary system, I guess, has pretty big bones as a business. It has the ability to be quite scalable and very, very large. And if people were to, like, say, for example, go to our website, which is kinesis.money, then they'll find a lot of great information there. Our roadmap, for example, there, we're in what's called pre-sale at the moment for these Kinesis Velocity tokens, which are raising capital ultimately to build out the entire system. We've got our core technology and infrastructure already built, but, you know, we're still developing and building onto everything there as well. And there's still a few more months actually now of pre-sale, and then we go into like a large public sale, which will last a couple of months. And then around November, we start to then offer like buy-in into our currency suite. So that's sort of like the roadmap. But, you know, if someone's looking for like a speculative type investment, which, you know, gold and silver are much more stable investments that will come later, and want to support our system as well, then they can actually look at these Kinesis velocity tokens. So yeah, there's plenty of information on our website about that. Please look us up. Please subscribe to our subscription of interest, etc. And we'll keep you informed with everything.
Thomas Coughlin, thank you so much for coming on Crush the Street and just kind of expanding our mind today on the development of money. So that's really cool. Thanks so much.
No, thanks for having me on, Kenneth, and hope I can keep you up to date with our journey and your audience.